Okay, well, I think we're ready to get started now. I want to first thank you all for joining us on our webinar today. Our focus will be on why traditional project management approaches fail for remediation projects. My name is Lacey Orr, and I'm going to be your host for today. If you have any questions after this webinar, feel free to shoot me an email at my contact information on the screen, just lacey@enfos.com. Now, for those of you who are unfamiliar with who ENFOS is, we're a cloud software platform, and we exist solely to help companies manage all of the complexities around managing both remediation and decommissioning, and that ranges from the financial all the way to the technical aspect. For today's webinar, we'll be discussing the topics that you see listed on your screen here, and since all of our attendees are muted for this webinar, you'll be able to submit any questions that you have throughout the webinar through the questions tab you see on your dashboard, hopefully. And we'll try to answer those live at the end of this webinar. But for those whose questions that don't get answered today, we'll be sure to follow those up with an email. And we welcome all discussion at the end of the webinar, so please don't hesitate to send any questions that you may have in. Additionally, today's webinar will be recorded and made available to all the attendees within the next few days, and we'll also be publishing it on our YouTube page. As you can see, Roger Well will be our speaker for today. And Roger started his career as a hydrogeologist with a consulting firm in New Jersey, and his first 13 years were in the environmental consulting industry. In 2000, he left the consulting industry to help start up ENFOS, a commercial software company, focused on enterprise software for the environmental remediation and decommissioning industry. And you can see a summary of his background shown on this slide. Roger works directly with our ENFOS customers and companies that are looking to improve their remediation business function. And with that, I'm pleased to hand it over to Roger. Thank you again for joining us today.
Hi, everybody. This is the second time we're running this webinar. We ran it yesterday. It had a very good turnout, some good questions, and very high participation in our poll questions. So we have 4 poll questions that we're going to be running during the webinar, and we'd like everyone to participate if possible in that, and we'll discuss the question and we'll also show the poll results. Also in the webinar, we have several slides that get into analytics or using data to help substantiate a point that we're making. So we hope that you enjoy those, but we like to include some analytics within the discussion. And we also have several screens that will identify best practices around managing a portfolio of projects within a remediation business function. If you have any questions on those best practices, feel free to ask through the panel, as Lacey talked about. If you'd like to talk to us individually, you have our contact information, and please feel free to reach out to us so that we could arrange to have that discussion. I'm going to start with the overall opportunity statement around project management failure using traditional systems and kind of get into the driving forces behind this. So what we're going to be talking about is attempting to control the uncontrollable. And we break that down into really 2 things. One is executing with a razor-sharp focus on the things that you can control. And for those things that you can't control directly, you may be able to influence. We believe that a highly repeatable business model is the best approach to try to mitigate those risks. So we're going to be hitting on both areas that we can control as well as areas that are out of our control, that if we perform certain practices, we have the ability to influence those favorably. Starting with the real big picture, I just want to point out what the U.S. government has estimated through the years in terms of actual cleanup costs within the United States. So this goes back 40 plus years, and the very first estimate that our research found is that around 1980, when most of the programs were just starting, the government estimated that we had about a $1.6 billion problem. 10 years later, that was re-estimated to about a $27 billion problem. In 2000, that estimate was reforecast to $200 billion. And more recently, the numbers that the government is putting out there for both private and public sector cleanups is exceeding $1 trillion. So in terms of the opportunity statement, or if you flip it, the problem statement, you're really looking at it right here. Remediation work is very, very difficult to estimate. It's also difficult to identify all of the remediation issues or environmental matters that each individual company or government agency has. And we're dealing with a situation where the forecasts and the financial roll-ups of the estimates to complete are continuing to grow. So that's the real big picture. And what I'd like to do now is drill down to maybe a more of a mid-level viewpoint, and that would be the viewpoint from a corporation. Luckily, we have information through public disclosures that we can look at to evaluate how corporations, publicly traded in the United States, are performing based on what they're disclosing on their annual reports. One of the methods that we use to evaluate that and to communicate the overall business problem that we're trying to solve is using ratio analysis. So one of the ratios that we like is the accrual to expenditure ratio. That basically would be your adjustments in any given period, generally an annual period, your adjustments to your reserve divided by your expenditure or your spend during that same period. It's a very simple equation. In my example here, you can see that the accrual to expenditure ratio is 1.3. So in this case, $100,000 was added to the balance during the period, and $75,000 was spent or used to settle liabilities. Therefore, the ratio comes out to 1.3. So we look at ranges of these ratio values. We have three zones that we evaluated. Zone 1, we call it the red zone. That's where the ratio was greater than 1. In that case, the reserve balance is increasing. Zone 2 is between 0 and 1. In that case, the balance is decreasing or it is flat. However, for every dollar that you're spending or using to settle liabilities, you're not decreasing the balance for that same amount. That's why that's yellow. And then the third zone, the green zone, is where you have a ratio of less than 0. In that case, the corporation booked a negative adjustment. They actually reduced the balance from an adjustment standpoint in addition to spending money to reduce the balance. So we took a fairly random sampling of publicly traded companies, most of which are headquartered in the United States. If they're not headquartered in the United States, then we looked at their 20F filings. These are the 33 companies. They're from 8 different industries. And the results of that are shown here in the pie chart. So these colors represent the zones that I just talked about. The red is where we have a ratio greater than 1. The yellow is between 0 and 1, and the green is less than 0. So over 94% or 94% of the companies were either in the red or yellow zone. And I would think that the red zone itself is where we're showing companies that are actually booking accrual additions greater than their annual expenditure. So they're in a liability growth mode, if you will. Okay. So we're going to put out our first poll question. We'll give everybody about a minute to look at the question and answer it. So the first poll question is, do you use ratio analysis to evaluate your remediation financial performance? Yes, no, or not sure. And you can go ahead and start and then share the results. So everybody knows how they answered. You can compare that to how everyone else answered. We have about 30 plus people on the call, so that's the total population. So about 41% are saying no, we're not currently using ratio analysis, and another 41% not sure, and about 20% are. So that lets you kind of quickly size up where your answer stacks with the rest of the group. So I'm going to hide those results. All right, we're going to jump into the first major category of the presentation, and that has to do with uncertainty. So most of us that have general project management training understand that you have to deal with risks within your project scope, your cost, your schedule, and your deliverables. I'm making the case that remediation projects have a much higher than normal uncertainty than what most traditional project management systems were designed to deal with effectively. So let's explore that a little bit. So I like to use third-party sources where I can, again, to help substantiate a point. The source of this information is from the National Research Council, and it was a report that they did called Groundwater and Soil Cleanup, Improving the Management of Persistent Contaminants. What they're focusing on are remaining sites that are still in the portfolios that each of you are managing or dealing with. So basically, we're still dealing with the most difficult sites for which the effectiveness of the remediation remains uncertain given their complex site conditions. So if you're looking for a statement to take back, to review internally, or to discuss with the executives in your team, this is a perfect statement that really represents where we're at least in the United States. We're dealing with a lot of complex sites that are remaining in our portfolio. So that's going to drive how we perform our business in the future. ITRC produced a study, and I apologize for not having the source listed here, but it is in our presentation deck if you request that from us at the end of the meeting. But this is from the ITRC in a report that they did called Project Risk Management for Site Remediation. And they identified these 7 primary risk categories that attribute to uncertainty in remediation. Risk assessment, and that's a broad area. It includes human health, environment, and ecology. Remedy selection and performance. Regulatory, economic, project performance, which is a lot of what we're talking about today. Scope, cost, schedule, and deliverables. Legal and political and social. The report that I referenced from the ITRC actually ranked these risk categories from highest risk to lowest risk, and the number 1 risk category that they identified in their study was remedy selection and performance. So that tells us that all of the work that we're doing leading up to remedy selection and then ultimately execution and monitoring of that remedy, that work leads into the biggest decision that you have to make on any given project. The selection of the remedial approach and then monitoring the performance of that through time against the standards or criteria that you're working to achieve. So a few data slides that show the impacts of these risks and uncertainties in remediation projects. So ENFOS did a study with about 3,500 projects, again from multiple industries, and we looked at 2014 data. And about 60% of every remediation project or remediation initiative required an adjustment to the reserve, or another way to look at it, to the estimate to complete. 40% did not. So over 2/3 of an average, somewhat static portfolio is showing that you're going to need to document changes, estimate the impacts to those, or monetize those through your planning processes, go through your approval process, and attempt to justify and support a change. So that tells us there are a lot of changes going on annually around evaluating the work that we've done, how much does it cost, what work is left to do, how much is that going to cost, and then what type of adjustment do we need to make to true it up. Drilling down a level deeper on that last slide, so this is showing whether the change was either an increase or a decrease. So out of that same group of sites, 3,500, about 71%, or about 3/4 of the plan adjustments were increases to the remaining balance. Okay? So in essence, they're going in the wrong direction unless your reserve policy or your estimating policy is designed to do that through time. But that's another discussion. So our first slide on best practices. So dealing with uncertainty in a remediation portfolio, remediation business situation, we've identified 7 to 8 key best practices. Scenario planning and forecasting. So almost all of the resources that you can look at, as well as talking to experienced professionals, will tell you one of the best ways to reduce uncertainty and to be able to create a narrative around the project and what the company's facing in the future is to do scenario planning and forecasting against those scenarios. There's obviously a point of diminishing return, because you don't want to spend all your time coming up with different scenarios or decision trees to forecast those to ultimately just pick an expected value or a most likely value. But doing some level of scenario planning and forecasting is critical. Associated with that is identifying specific risks and opportunities. We call those potential trigger events. We might have on the books a forecast for strategy A, but if the regulatory agency who's reviewing our remedial action plan does not approve that as we've scoped it, or if there's a delay in the approval of that, that would be a potential trigger event that may materialize. So looking out into the future and identifying the material risks and opportunities, quantifying those, and having those documented in the case narrative is a best practice. A few more of these are listed here. Watch lists. This is very important if you're dealing with a portfolio or a large organization that has a lot of other facilities that you currently don't have an environmental issue identified. Because we all know that on an annual basis, you'll probably have an inflow of new sites, new spills, new discoveries to deal with. Tracking and managing those is critical, and identifying those with some type of a separate tag or filter would be critical to tell the story on why we're increasing our reserve through time because of new sites, new spills, new discoveries. Decision gates and support packages. So many of our customers are following some type of a capital value process that includes stages and stage gates and approval processes and required supporting documentation for each one of those gates. Strong change management and financial controls. So when you're dealing with budgeting, you're dealing with procurement of services to the supply chain, and you're dealing with expenditures, having strong financial controls in place by which you're using an automated process for those financial controls is a best practice. Variance analysis. This gets back to some of the fundamentals of project management. Cost variance, schedule variance, as an example. Earned value is a classic variance analysis technique. We don't recommend that variance analysis be conducted on every single project. Again, there's a point of diminishing return on that. But on larger, more complex projects, variance analysis is certainly a tool and a best practice. Utilize data for analytics. And then finally, around uncertainty, educate and inform the non-environmental executives through a transparent process. So I'm sure a lot of the directors, remediation managers, or vice presidents are doing this on a regular basis. But it's about educating the organization who doesn't really understand environmental liability management about what it is that you're challenged with. Okay, we're going to move over to the time dimension. This is the second major element of today's discussion. Two critical components: the extremely long life cycle, and then the uncertainty changes through time, or uncertainty changes throughout the life cycle. So the education of the non-environmental executives, one of the very first things that I'm sure you're talking about, or if you're not, you should, is the time component. We're dealing with projects that may never go away. They're persistent. They'll change phases through time, and the rate of spend will change through time. But these are very, very long life cycle projects. Many sites have multiple areas of concern as well. So if you're dealing with a large facility or a large decommissioning project, you're going to be dealing with different types of remediation issues. Too long and complex to manage as a single project. We'll get to that in a little bit. Many factors can lead to restarts or material changes in strategy. So your list of change reasons, or your factors on why your estimate to completes are changing, is a pretty long list. But you're going to see things on there like regulatory change, regulatory delay, new regulation, new standard, new criteria, change to the risk assessment assumptions, change to the conceptual model. You're going to have a lot of things that are uncontrollable, and then you might have other reasons that are more in control, such as just a bad estimate. We underestimated. We did not fully delineate the plume at the time that we made the original estimate to complete. These are examples. And then, because of the very long life cycle, each individual project will accumulate massive amounts of data and information, and that information is all bundled or rolled up for decision making. So these are the things that contribute to the difficulty in managing remediation projects in a traditional project management environment. Uncertainty changes throughout the life cycle. Most of us that have been in this industry know that the highest levels of uncertainty are in the early phases. Remedy selection is a main cost driver, as we talked about earlier. Potential trigger events are generally known and quantifiable. The problem I see there is that the majority of companies that we're working with do not have enough rigor or enough diligence around documenting potential trigger events. The project managers may know about these things or these issues. They may be discussed during project review meetings or strategic meetings. But what I don't generally see is that there's a rigor around the documentation of that so that it flows through the entire planning process And that becomes transparent information to the finance and accounting teams as well as the executives in the organization. So at some point, that information ceases to flow through in many organizations that we work with. And that ends up creating miscommunications, poor perceptions, and ultimately surprises to the business. And then related to all these, many projects are set up to fail just because there are too many unknowns in the scope and the schedule. This is your classic chart showing changes in the estimate accuracy through time on a known type of an issue or project. The percentages, in my mind, for remediation work are much higher than this. This comes out of the American Association of Cost Engineering manuals. It would be typically for construction or capital projects. I would probably say that for remediation, these percentages, the plus or minuses, could be double in size. Okay, so part of that gets to those earlier pie charts that we looked at. Again, the communication issue, whether it's between the consultant and the project manager for the owner or representative, or it's between the owner's management teams or executive teams, the problem becomes, what is the expectation of performance? Right? That's what the red line is designed to represent. So early on in the early phases of remedial type projects, the uncertainty is very, very high. We almost always see a most likely value targeted and even budgeted. And then as more information is discovered and evaluated and analyzed during the investigations and risk assessment phases, we're able to fine-tune those. But without a clear understanding and a clear qualification of our estimates and the amount of project definition that we have with that estimate, you may be missing the mark, not only in your financial numbers, but also in your internal communications. Some best practices around the life cycle issues. Shorten or attempt to shorten the time window in the early phases. So if that means doing more rapid data collection and site investigation, so that when you look at your individual sites within a portfolio, you're reducing the amount of time of the high level of uncertainty, that can lead to improvement in the accuracy and the qualification of your estimates. More short-term, reduced scope projects in the early phases. Again, a pretty basic tenet. We see this happening pretty much anyway. As an example, when you move sites into long-term monitoring phases, you're more likely to procure services over a multi-year period of time. Whereas early on in projects, you're typically doing more competitive solicitations with multiple suppliers to evaluate a site from an initial characterization through maybe a delineation to a feasibility study. But maybe we're not breaking those down enough. So if you're dealing with issues and problems in your early phases, you may want to push the envelope even harder on breaking the early phase projects into even smaller scopes and therefore reduce the uncertainty. Quit using spreadsheets. So I'll harp on this point for just a minute, but spreadsheets are terrible for version control, terrible for data quality, for change tracking, for doing roll-ups of the portfolio, for evaluating historical changes in records, for reporting, for financial period closing, and for auditing. So if you're still using spreadsheets for your estimate to complete and some of your project management functions, there are better ways. And you probably need to look at making a change if your performance, if you desire your performance to improve. Develop forecasts to at least one level in the work breakdown structure to a company-wide WBS. So one of the things that we see out there a lot, especially in diverse types of portfolios and mature portfolios, is that the work breakdown structures on each individual project are unique. So that it's very difficult for someone at the company level or a business analyst level to do any type of review and analysis without having an army of analysts working on it. And what we hear from the project managers is that, well, my project is so unique and I've been working off of this particular work breakdown structure since we started. Well, the time is never good to make a change necessarily if the benefit isn't there, but for companies that have standardized their work breakdown structures, either by facility type or project type, or maybe for the company as a whole, they have much, much cleaner data, and they're able to use that information for better decision making. And then finally, get your project managers to focus more on the governing equation around reserve management. And it's pretty simple. It's the new estimate to complete, the new estimate, minus the balance, and that will equal the adjustment. So your finance and accounting teams are already following this general governing equation. So why aren't your project managers? Okay, they should be. They need to have the same competencies, the same general understanding of how the reserve balances, the adjustments, and the expenditures are impacting the company. So we strongly recommend that you move your remedial project managers into this type of a mindset. Okay, and a few more best practices. Manage changes as they occur. A lot of companies still follow the financial calendar, and they do an annual deep dive, and they may be trying to catch up with decisions and issues or changes to the project that occurred months ago. That is not a best practice. You lose granularity of information, you lose decision-making opportunities, and the ability to influence the outcomes. So we're suggesting as a best practice that you manage changes as they occur so that you're truing up your estimate to completes on a more frequent basis. And that should not involve extra work, right? Because sometimes the objection to that is, well, our annual deep dive already takes us a couple of months a year. Why would I want to be doing that consistently throughout the year? The reason it's taking so long is because you're playing catch up with things that have occurred throughout the year. So if there's a material or an adjustment that meets a certain threshold, we're suggesting that you deal with it then and take it through your management process, provide the documentation, and deal with it when it occurs. Qualify your plans and document your absolutes or your gaps for each plan and each plan revision. This gets back to qualifying the level of accuracy based on the amount of information we have when we're constructing our estimates. And we've seen a lot of good templates or forms out there that companies are using to document this, but we'll talk to other organizations and they're not doing this at all. So there's an opportunity for a lot of companies and their environmental consultants to beef this area up. Standardize your change reasons so that you can do factor analysis, right? If I have 70% of my plans being increased every year, the next question is, show me the distribution of those changes by reason and the dollar amount for each one of those. That will allow me as the executive to develop strategies to impact the highest factors from that analysis. Again, so that we can deal with it proactively and try to change the course of our reserve balances through time. Link your life cycle planning with your project work commitments and spending. This gets back into automated financial controls. Another way to say it generically is work the plan. So once you have identified, once you've created your conceptual site model, your remedial action plan, or your mitigation efforts, and you've approved your plans, once you start executing projects, you should have a strong linkage between those projects that you're executing and those plans. And then track and leverage your historical data. One last remark about time, and then we'll move off of that. This doesn't have anything to do with time in terms of the life cycle, but I thought this was a good opportunity to get on the soapbox. Spend more of your time performing high value-added activities by spending less of your time performing low-value activities. So the detail of expenditures on remediation projects is still heavily weighted to labor cost. Over 60% of the total cost of remediation work is still labor. So that means we have a lot of people internally, we have a lot of smart consultants in our supply chain working for us, but we're getting charged per the hour, or we're paying salaries and benefits. So what you don't want to have is a remediation business where you're still doing a lot of manual work. You can standardize your business practices, streamline your workflow, you can automate, you can eliminate redundancies, you can reduce your silo or shadow systems, and you can leverage your built-up data and knowledge. So when it comes to time, I think as leaders, we need to always be looking at what is the work and what are the tools that our teams are utilizing and performing. And how can we eliminate low value added activities like data administration, duplicate data entry, quality errors, you name it, and get them focusing on the things that we want them to focus on, like regulatory advocacy and strategy and negotiations and remediation optimization, as an example. All right, the last topic area is integration. So I wanted to start out this with a very high-level statement when it comes to the differences about remediation work compared to other work that utilizes traditional project management. So remediation management is a process involving discrete sets of work activities from beginning to end along a continuum. So notice I didn't say remediation management is a project. It truly is a process. But managing the work activities on the continuum as projects leads to higher satisfactory completion rate and uncertainty. So ultimately what we're saying is project management is a subset of your overall methodology when managing remediation portfolios. In its entirety, as we're going to talk about, remediation is a process and not a project. An excellent resource for the project managers out there is the Project Management Institute. And they produced a white paper this year called Managing Organizational Complexity, How to Optimize the Governance of Programs and Projects to Improve Decision Making. Had nothing to do with remediation work, but these complexities hit home on our types of projects. So organizational, operational, outcome complexity, which is a large one for what we do, right? Because what is our exit strategy? What are our endpoints? What is the property reuse strategy? The outcome complexity is a big driver in remediation. External forces complexity, and then obviously stakeholder complexity. All of these show up when you look at how most of our companies are structured to deal with contaminated property. We have all these external forces like our environmental regulations, the Security and Exchange Commission, property owners, community at large. We have organizational issues and complexity around all of our different business functions that have touch points with what we do, IT, finance, real estate, and so on. And then we're expected to manage multiple sites within the corporation, sometimes all over the world. So we're dealing with different currencies, different regulatory environments, different types of consulting arrangements. The work is all outsourced. The majority of it is to environmental consultants and outside legal, and they're using subcontractors and labs. So we have many, many disciplines, thousands of transactions and documents. It's a complex regulatory environment. The work is outsourced, and we have many information management systems to try to deal with all this. So let's look at some best practices around the integration of project management within the overall remediation management process. So the first one is organize the portfolio from the company level to the area of concern. So if you're managing 100 sites, there should be a structure around that. If your portfolio is 1,000 sites or several thousand sites, you need to have a very well-defined structure to organize the remediation process, but also the projects that will make up the work that we perform. Bundle your projects within the area of concern. Okay? So you need to have an entity, which we're calling the area of concern, from which you're going to do your financial planning, your estimate to completes, and the baseline for your reserve estimates. But once we start executing work, we're going to bundle projects within that area of concern or that particular planning entity. We have a diagram to talk about that in a second. Incorporate your project management systems within your remediation management process. And then finally, deploy an integrated process within a single management system. So let's look at this kind of from the site level down to the actual expenditure and show what the linkages can be. Sites control areas of concern. That's portfolio management. Areas of concern control plans. Those are your remediation units and the financial projections for those. Plans control projects. Projects control purchases. That's your project management framework. And then purchases control invoices, and that's traditionally called purchase to pay. So if you're managing your project management systems along with your remediation management process, you can have an integrated process like this. And they should be integrated. What you shouldn't be doing is looking at project management as a separate, completely separate overall process that we need to do with our financial disclosures, our long-term or life cycle estimates, and our reserve balance management. They need to be strongly linked. All right, the last graphic that I want to go over is shown here, called the repeatable business model. So the practices that I just talked about are really depicted here. So we've got our organizational structure shown here on the hierarchy, and we just stopped it at the region level. It's going to go higher within your organization. You might have business units, countries, segments, affiliates, different levels above this for reporting purposes. But you have multiple sites within a region. Within a site, you're going to have one or more areas of concern. You'll bundle projects within each area of concern. So as an example, area of concern 3 is set up to manage a particular incident, maybe a particular suite of chemicals of concern that we're dealing with in a certain media type. It could also be viewed as a remediation unit or an operable unit, depending on your terminology. But with that area of concern as a planning entity, we'll have forecasts, we'll have reserve balances, we'll have details around the scope of work. We'll bundle projects within that. Project details would include multiple proposals from the suppliers that are working on those sites for us. Some of those you're going to approve, some you'll reject. Those get converted to purchases, and then invoices will be submitted against the purchases. The invoice, even though it sounds like such a transactional, low-level piece of information, it actually should contain everything you need to do variance analysis on your projects, such as percent of work invoiced, percent work remaining. It allows you to actually draw down your balances as you're completing work to true up with your estimate to completes later on. So please never discount what value the invoice brings to the organization. It's the bottom level within this overall structure of capturing actuals so we can measure performance.
So as Roger said, that does conclude our webinar for today, and I want to thank you all for participating and joining us. And before we get into any of the questions that came in, I wanted to provide my contact information in case you have any questions regarding today's content, or if you would like a copy of the PowerPoint that we're using today. So just shoot me an email at lacy@enfos.com, and I'll get you that PowerPoint as soon as possible.
Okay. Great. We've got a few minutes, and you guys can hang on. We'll answer as many of these as we can if you'd like to hear the questions and answers. If not, we appreciate your time and effort. And, you know, as Lacey mentioned, if you'd like some follow-up from us, please reach out to us. The first question is, what do you use instead of a spreadsheet? So that's a great question. I can tell you what we have found during our business capability assessments, what people are using instead of spreadsheets. First of all, most people are using spreadsheets, so I understand the basis of your question. Some people are using homegrown databases. So maybe they built an Access database, a SQL database, something like that, but they haven't created an enterprise approach to this. Some companies are using applications, particularly desktop applications like Microsoft Project. So we'll see where they're attempting to use, you know, your classic project management type software where you're creating tasks and subtasks and start date, end dates, and doing Gantt charts and the like. Again, that's using Microsoft Project or Primavera, even at an enterprise level, is very challenging for remediation because of the volume of changes that you have to deal with, and it's very difficult to fit that within your business processes, such as your procure to pay or your reserve management process. So I can tell you that what ENFOS does is ENFOS has created an enterprise management platform to do the best practices that we've identified here. So it's a web-based application, highly secure, that allows consultants and project managers and then finance and accounting people to work off of the same platform and to automate the workflow. So I'm going to move on. Another question is, how do you recommend that we educate non-environmental executives on the differences between remediation work and other general work, such as IT? Well, one approach to that would be to download some ENFOS white papers. We write about this a lot. One of the white papers was a business case on why environmental liability management deserves its own platform structure, and why that's better than trying to cobble together multiple applications for purchase to pay, for estimating, for document management, for GIS management and the like. So I think, you know, finding a company like ENFOS that specializes in this is one way, and engaging with us. The other, it would be to you know, go through your data, right? Do some charts and some trends, and you know, do some type of a study or analysis on your existing information if you have access to it, and present the story that the uncertainty levels are very, very high because of these things. You can even pull in some of the type of references that I did in my presentation today. And you can request a copy of the presentation from Lacey via email. We'll send that out. That lists the references. So there's no easy answer to that. You know, some organizations like the transparency, others are a little scared of it. So they're, you know, would say it's going to take a little bit longer to change the hearts of the non-environmental people. Last question that I'll answer, let me pick between these three. Can you explain the area of concern in more detail? That's a really good question. The area of concern was originally designed to identify a specific remedial initiative that you need to work on, right? So let's just say you're working at a manufacturing plant and you've got an underground tank problem in one area where you're dealing with petroleum hydrocarbons, and then maybe you had a release of some solvents on another area of the property. Those two would be individual areas of concern, because you're going to be working on those separately. You're going to have separate and unique financial plans or your life cycle estimates. They both have different site conceptual models, and you're going to be procuring services and spending money to remediate or mitigate the problems of those two areas. So we would call those areas of concern. And it's much more effective to unbundle those from the site in terms of your project management and your remediation processes. So a lot of companies tend to bundle all of the activities they're doing at a large facility into just one overall site view. And we think that's a mistake. It's not granular enough to control, plan, and manage the work effectively. Okay. So we had a few more questions, but because of time, we're going to go ahead and stop there.
Again, thank you all for attending our webinar, and my email is lacy@enfos.com if you have any follow-up. Thanks again for attending, and stay tuned for our next quarterly webinar update.
Thank you, everybody.